Hello, everybody, and welcome to the 50th edition of LM's Weekly Wrap, our weekly program to cover the developments in the markets, both the domestic as well as the international markets. This week has been a dull week of sorts. There was no action, real action in the markets, but outside the markets, there was pretty much a lot of action. We've seen on the political front, we've seen as far as the international markets were concerned, we've seen Powell's testimony before the Congress in the US. And as far as our Prime Minister Modi ji's visit to US, we've seen on expected lines the jet engine deal which has been signed and a whole host of other deals which are going to be signed. And markets, true to the nature that buy on expectations and sell on news, has behaved in this particular typical fashion. And we've seen last 3-4 sessions of the market being very, very lackluster. But nonetheless, I think it's going to be a wait and watch approach for the time being. And to start off with, I think Jash will brief us about the international markets and the domestic markets in general, which will be followed by the sectoral outlook from my side. So welcome, Jash, to the show, and kindly take us ahead. Yeah.
Thank you, sir. First of all, I'm very excited as this is our 50th edition. In another 2 weeks, we'll be completing a year. So I think we have been consistent with our wraps, and more or less we have been online with our commentary, our judgment, our analysis, and I think we have been getting good response. I'll cut it short and I'll get back to our market wrap. So I'll start with the global scenario. The Powell speech in front of the Congress, he clearly mentioned that we're going to have 2 more rate hikes in this year, which has been factored in the market. Otherwise, European nations have been consistently raising interest rates because they're not being able to control the inflation. And the most important comment on this week is the country of Turkey. They increased interest rates by a record number of 650 basis points. I think this is one of the largest hike in the recent past, and this is mainly to control their runaway inflation. There are currencies in a lot of pressure. The Turkish lira is under tremendous pressure, and to save the dollars being taken out from the country, they had to take this step to manage their current account and also the foreign exchange reserves. So all in all, I think they're in a lot of pressure, but we should give it time, and that's what it's a drastic step, but this expects to give some kind of result in the next few months. Like rise in interest rates is going to tremendously slow down their economy, but that will also save their currency. Coming back to India, my comment remains the same. We are in a growth phase, but the market that has been going up since the last few weeks, we have seen a pause over there. In the last 2 days, we have seen healthy correction. There's nothing to panic over there, but always the healthy corrections are always good. It means that it makes more room to go up in the near future. So maybe this is a buying opportunity, the opportunity for the people who had missed the bus. For more insight on the sectors, I would hand it over to Nirav, sir. Thank you.
Yeah, thank you, Jash. So yes, we start off with the sectoral outlook with respect to the markets. It's been a kind of a phase for the markets where what we call as the dream run, and certain sectors have been big beneficiaries out of this dream run, particularly sectors like automobile, banking, cement. They've had a fairly strong run in the markets. We've seen good commentary coming from auto companies. We've seen a dream run, and we've seen this happen in bits and parts. First we had some very positive commentary coming in from Tata Motors, then from Mahindra and Mahindra. Then of late, recently we got a positive update from Ashok Leyland Limited, and all this has resulted in auto ancillary stocks also becoming euphoric. One is the huge EV opportunity which is coming, the electric vehicle opportunity which is coming in the market, plus of course the auto ancillary stocks which tend to derive demand from OEM, that is the original equipment manufacturer sales. In some categories, there is also a replacement demand. In some categories, there is an export demand too. So, especially companies like the tire companies, the battery makers, etc., have the benefit of getting an advantage of all these three categories. Plus, the raw material prices have been stabilizing. The raw material prices have been coming down. Crude has been coming down. So, a lot of companies which use crude derivatives as the raw materials have got an advantage all over. So, it's been like revival of demand happening at the same time, prices stabilizing at the same time, being able to get rid of high cost inventory which was there in the channel pipeline. So all these factors have worked out well, and I think the auto companies had a dream run, followed by auto ancillaries which also had a dream run in the markets. Now, apart from this, I think we had banking. Banking also has had a dream run, but I think it's taking a pause, it's taking a breather at the moment. And we've seen private sector banks, public sector banks all taking a breather at the moment, but the real running around has been happening in the NBFCs. We've seen NBFC stocks do really well in trade. We've seen stocks like L&T Finance Holdings or AB Capital or Shriram Finance, etc., being in the thick of action of late. So I think banking NBFCs also doing quite well in trade. We've seen capital goods sector do quite well in trade recently. We've seen cement do very well. Of late, I think a lot of cement companies did manage to hit their 52-week highs, whether it is Ultratech Cement or whether it is Shri Cement, whether it is Birla Corp, JK Cement, Dalmia Bharat. All these companies have been hitting their 52-week highs. So I think the cement sector has also had a dream run. We've seen FMCG sector have a dream run in the markets on account of the premiumization agenda. And I think in the FMCG space, the front runner has been Britannia. I think it's had a phenomenal run, followed by Nestle. And the underperformer in the FMCG space has been Maruti. I'm sorry, it's been HUL. So HUL has had been facing a few headwinds of late. So I think that's about the FMCG sector. Then we have IT. IT is a sector which has underperformed, and today I think we've seen the Accenture guidance, which they have reduced the guidance, and that has again had a negative impact on the IT sector. So I think Infosys, which has been hit hard. Wipro is these are the stocks which have been under tremendous pressure, followed by TCS, HCL Technologies. On the overall level, I think the mid-cap IT stocks have done relatively much better. A sector which is coming out of the woods, which is coming out of problems, is the pharma sector. And I think this week we had an important announcement from Lupin, the Spiriva generic which approval which they have got for the US. I think it can be a game changer for the pharmaceutical industry in general and Lupin in particular. So I think that can be a very, very positive development as far as the sector is concerned. Already in the pharma sector, we are seeing companies making a comeback. We've seen Aurobindo Pharma hit a 52-week high. It's at a 52-week high. We've seen Star, that is Strides Pharma, also report a better set of numbers. It's making a turnaround in its operations. The frontline companies, of course, like Dr. Reddy's Laboratories or Cipla, Divi's, etc., are also making a comeback. So I think with this development from Lupin, it could be a positive sign as far as the entire pharma sector re-rating is concerned. Some of the smaller companies have been struggling in the pharma space. We saw companies like Indoco Remedies or Ipca, which are still struggling with various issues, regulatory issues. But I think it's just a matter of time before things get sorted out. As far as the emerging sectors are concerned, we've been particularly highlighting certain sectors like hotels, textiles, defense, railways, etc. Now, this week, I think hotel stocks did take a breather ahead of the quarterly results. We'll get some more clarity on this sector in the first quarter results. We have textiles. Textiles, we have seen stocks trying to make a comeback, whether it is the likes of Welspun or whether it is the like of KPR Mills or Himmat Singh Seed or Vardhaman Textiles, Arvind Limited or Weekender stock. I think textile companies have been quite clear that the first 2 quarters of FY24 will be difficult quarters, and it's going to be largely a muted performance. But they expect things to turn around from the second half of FY24. So they are expecting the benefits of lower cotton prices, the pickup in the demand from the international customers, etc. happen from the second half of FY24. So I think markets were enthused on account of this, and we did see some positive momentum in the textile stocks recently. As far as railways are concerned, I think the mood spoiler was the announcement or the news flow which came regarding Rail Vikas Nigam Limited, that they wanted a bigger share in the JV with their Russian partner. This is regarding the production of Vande Bharat trains. Now it was reported that RVNL wanted to a better stake from 25% to 69% in this joint venture. As a result of which, I think it was likely that their JV with the Russian partner is likely to get derailed, etc. While there was a clarification which was issued later on the same day that the original deal would go ahead in the same form, but I think that had managed to do quite some damage to the sentiment for the railway stocks. So I think post that session, I think the railway stocks have been under some sort of pressure, or they have become largely subdued in their performance. Defense sector, I think the theory which goes that sell on news is applied over here. We saw the deal happening yesterday in the US. So HAL, Hindustan Aeronautics, did manage to get that MOU with US for the transfer of technology with respect to the jet engines. So it's a positive, but the stocks did sell off on that news. So it's a
healthy profit booking.
Yeah, healthy profit booking, what we call it as. But nonetheless, I think we continue to remain positive on all these sectors. Whatever sectors we have discussed, whether it's railways or whether it's defense, hotels, textiles. One sector which has been facing the heat is consumer durables. I think they have been impacted with the northern part of the country being a laggard in terms of sales on account of unseasonal rains. So we saw the sales of air conditioners have been impacted in the recent quarter. So it's going to be a sluggish quarter as far as consumer durable makers are concerned. But I think Blue Star could be it could be an exception to this, because commercial refrigeration has been doing very well, and they are particularly focused on products like deep freezers, chillers, cold rooms, etc. So watch out for that stock. And finally, I think the last part of our program, this run in the market has been used by a lot of companies to pare stake, to reduce the stake. So that also is a slight warning for the market participants. It's estimated that close to 40,000 crore of bulk deals and stake sale has happened in the recent last 8 to 10 days. Now, yesterday we saw Craftsman Automation, where the promoters have sold close to 5% stake in the company. Prior to that, we've seen companies like Sona BLW, Precision Forge, where promoters have sold 3.3% stake in the company. Timken Limited, where the Singapore-based promoter has sold 10.10% stake in the company. These are just a few instances. Apart from this, we've also seen private equity players pare stake in a lot of companies. Now that's all been reported in the press. It's widely reported in the press. this raises a moot question in the mind that whether the valuations are stretched at this point of time, or is it certain promoters who are trying to take advantage of the prices. Finally, we all know that the promoters understand the business the best. They know what is the optimum valuation of a business, what is the best valuation they can get for a business. And it's particularly very intriguing that a company like Timken, where the promoter has to come out and sell 10.10% stake in the company,
which is
yes. And we have seen wherever the promoters have come and sold stake, the sentiment does tend to get spoiled for a brief period of time. So these are certain caveats which we need to look forward to, and of course going forward into the market, it's going to be selective investing. We'll see a selective rallies in the market, like what has happened in today's market. If you see the texture of today's market, then I think all the Adani Group stocks have been under tremendous pressure in today's market. But at the same time, MNC stocks have outperformed in the market. So it's a kind of a very, very diverse market and a very challenging market.
It's always been that way, if you go to see.
Yes. So I think lots of other themes to discuss, but time paucity is there. So I think on this particular occasion of our 50th episode, I think we thank you for all your support and for all your comments, your feedback, etc. And now I hand over to Jash for the closing comments.
Thank you, sir. Please like, share and subscribe, and see you soon next week. Thank you.
Thank you very much.